Welcome to Spiedel's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're covering the new Trump accounts that were established under the One Big Beautiful Bill Act. We'll be covering the new act in detail at Spiedel's Federal Tax Update webinar on December 18th and 19th. For details and to get registered for this year-end update, go to spiedel.com and click Webinars. The One Big Beautiful Bill Act creates new IRA-like accounts for children called Trump accounts, applicable to taxable years beginning after December 31st, 2025. The accounts are treated in the same manner as IRAs, with special rules during the period the beneficiary is under 18. While these accounts are IRA-like, they cannot be set up as a Roth IRA. The accounts can only be invested in eligible investments until the year in which the child turns age 18. Guidance is needed to determine how to properly establish these accounts and any additional limitations that may apply. The beneficiary child is required to have a Social Security number. Unlike other provisions contained in OBBBA, there's no requirement that the parents of the child have a Social Security number. Under new IRC Section 6434, taxpayers can make an election on behalf of their eligible child to have $1,000 treated as a tax payment for the taxable year. The $1,000 will be deposited into a Trump account established on behalf of the child. The $1,000 payment is not subject to offset and cannot be applied to reduce other assessed federal taxes that are due. Additional contributions to Trump accounts can be made from parents, relatives, and other taxable entities, as well as nonprofit and government entities. Except for employer contributions, contributions to the account can only be made after tax if they're made prior to the child turning age 18, and aggregate contributions are limited to $5,000 annually, which is adjusted for inflation beginning with the 2028 taxable year. The $5,000 limit does not apply to certain exempt contributions. Individual contributions cannot be made into an account until July 4th, 2026, which is 12 months from the date of OBBBA's enactment. Any contribution made to a Trump account in any taxable year beginning before the calendar year the beneficiary turns age 18 is not counted toward any contribution limit of any other IRA account other than the Trump account $5,000 limitation. In addition, all distributions from the Trump account are treated separately from other IRA account distributions for the purposes of the IRA aggregation rules. Qualified rollover contributions between Trump accounts and a direct trustee-to-trustee transfer are not subject to tax. Qualified ABLE rollover contributions made from a Trump account to an ABLE account established for the same beneficiary are also not subject to tax if they're made in a direct trustee-to-trustee transfer during the calendar year the beneficiary turns age 17. Beginning with the 2026 taxable year, employers can make contributions to a Trump account on behalf of their employee or employee's dependent. Employer contributions of up to $2,500 are excluded from the employee's income if made pursuant to a separate written Trump account contribution plan, similar to an IRC Section 129 educational assistance program. The $2,500 limit is adjusted for inflation beginning with the 2028 taxable year. We've been covering OBBBA in recent issues of Spiedel's Federal Tax Letter, a monthly newsletter plus a searchable online archive of back issues that keeps you at the leading edge of the federal tax issues that impact your clients. You can get more details and subscribe at spiedel.com under Publications. That's all for this week. Join us next time for another episode of Spiedel's Federal Tax Minute.